The Labor Department just wiped out 911,000 jobs from the past year. This is the biggest revision ever and means that 76,000 jobs have been overstated each month. Today, we're going to be covering what this means and what's happening in the stock market right now, like how, one, gold has finally taken out its 45-year inflation-adjusted record high. There's a historic $7.4 trillion now sitting in money market funds, and even how the S&P 500 had its own record close today. It's a great time to be a trader. So starting out, Tom won't be here for the rest of the week as he's dealing with some personal stuff behind the scenes. He'll be back in action next week though. And looking at today's historic jobs data revision, we can see that the U.S. Labor Department just released its preliminary annual benchmark revision, and it basically cut 911,000 jobs from the April 2024 to March 2025 payroll data. Again, this is the largest downwards revision in history, and this basically means that the average monthly job gains were nearly cut in half from about 147,000 previously reported to now only 71,000. This data basically shows that job growth was much weaker than thought for Biden's final 10 months and Trump's first 2, which just adds more pressure onto the Fed to cut rates. Now, even though this revision only reduces the estimated size of the U.S. workforce by around 0.6%, it does mean the economy added only about half as many jobs over that time period as it was previously believed. And basically, when we look at the prospects for rate cuts going forward, we have to remember that next week is the main week. That is when the Federal Reserve is set to cut interest rates for the first time. And basically looking at the current lineup of expectations, we can see that there's around a 92% chance we are going to see at least a 25 basis point rate cut, but we're getting a higher and higher chance of getting like a double rate cut where we might get a 50 basis point cut, as we can see in that 375 to 400 basis point range. Right now, there's around an 8% chance that we'll get like a double rate cut, and that chance keeps on increasing when we see just really bad jobs data like we saw today. Basically, this gives the Fed more ammo to cut rates, and a lot of people are wondering, like, okay, if the jobs market's so bad, why doesn't the Fed just do a double rate cut and get things, spurred again? And we have to remember that the Fed has a dual mandate. They have to keep the unemployment rate low, but they also have to keep inflation under control. And basically, that is why tomorrow and Thursday are going to be so important, because it's going to give us the next reading as to how inflation's doing. We can see tomorrow, 1 hour before open, we have PPI data that's basically set to show us how producer prices have changed. And then on Thursday, 1 hour before open, we're going to get CPI data, which is going to show us how much consumer prices have changed. So basically, we have just gotten a lot of important data over the past week or so, showing us that the labor market is just deteriorating. And now the Federal Reserve is about to, cut interest rates next week, but they have to know by how much they can actually cut rates by, because if they cut rates too much and inflation gets out of control, we could have a much worse problem than we're already kind of having right now. So basically, tomorrow before open, we're definitely going to get some big moves. And when we look at the market right now, we are in a situation where the market is getting tested again. Basically, the S&P 500, it closed at a record high today, which is great. But again, from Friday, we do have that all-time high on SPY right around that $652.21 area. The market, as we know, has been slowing down over like the past few weeks. Again, it's still at record highs, but we are in a completely different market environment right now than we were in a few months ago and even a few weeks ago. And it's important to pay attention to this, especially considering that we are in a time of the year where the market does tend to be, relatively weak and especially choppy in like a multi-month sense. We can see right on this red box here, number one, September does tend to be pretty bearish. It is the worst month of the year for the stock market by far. So far, September 2025 has held up fine, but we could see even when you look at the market's historical returns, not even just from like a month seasonality sense, but like a presidential like election cycle sense, the post-election year does tend to be like especially weak during these times. That doesn't mean the stock market has to crash and burn this year, but it is worth keeping in mind that we do normally see relative weakness in these types of environments. And when we look closer at the market right now, we can see that we do have a lot of key levels very close. That 652.21 level from Friday is the closest level and the most important level to look at for tomorrow. We can see we had a great finish into close, but that resistance overhead is notable, and we have seen a lot of strong selling pressure come in at this area in the past. And it was just on Friday when the market rejected hard at this level. So definitely pay attention to this. Again, there's been a lot of selling pressure here in the past. Looking at support, we do have good areas at 649, that 647.25 level, and 646. Keep a close eye on these areas in the event we do see a pullback, but we're very close to, all-time highs, and especially considering that we have key inflation data set to release tomorrow, it definitely will bring in some extra volatility, which is always good to see. And then another thing to keep in mind right now is that, this bull market this year has been very resilient, which is definitely good to see, and there's no complaints. But we are certainly approaching an inflection point where, the market's getting tested again, like we said. And right now, there's a record $7.4 trillion now sitting in money market funds, which is, of course, an all-time high. And basically, investors are looking to put their money into areas where it's going to get the best real returns, which partially explains why we have seen such an explosive gold market this year. Gold is an area of the market that, we've been covering quite a bit lately for good reason. It is crushing it. It made another new all-time high today at $3,674 an ounce. It's up nearly 40% year over year. And then another thing that was very cool today is that it has recently taken out its 45-year inflation-adjusted record high as well, which is, it's insane. It's historic in multiple different senses. And, what it really goes to show more than anything else is that, we are seeing like, a lot of money out there, a lot of investors, kind of losing faith in, number one, the market and a lot of the policy that is happening. When you have the largest payrolls revision in history, that is never a good sign, because it just shows that, the data that you are supposed to be able to rely on turns out to, not be as accurate as as you would hope for. So basically, we're seeing a lot of money still flow into gold, which is great to see. And then another thing too is we have, sentiment and euphoria building. And I think as a trader, this is especially worth paying attention to, because as we all know, sometimes the stock market moves in ways that don't necessarily make like rational sense. And, of course, humans aren't perfectly rational. And we are seeing a situation where, we're kind of getting, I don't want to say like a complete frenzy, but we're seeing euphoria build in the gold and precious metals area of the market. And we're starting to see some very bold calls out there, like this one recently from Goldman Sachs, where they basically said that they can see gold hitting $5,000 soon, more specifically by the end of next year, if the Federal Reserve independence comes under threat. But, when gold's trading at $3,600 an ounce and you're seeing calls for 5,000, it definitely starts to build on that euphoria. And then another thing to keep in mind is that, gold is not the only area of the market that is, ripping to the upside in a way that, you can't ignore. Even silver is having like a very similar pattern, where even though silver isn't at all-time highs, it is gaining a lot of steam. And it is showing and like forming a pattern that was very similar to, what gold did before it really broke out. So I definitely want to showcase this as well. But when we look closer at gold, it's one of those situations where the more euphoria that builds, the more it goes up, the more money that'll flow into it. And of course, there is no calling the exact top. So it's one of those situations where, if you're trading it, you really have to ride the rally until it ends, stay flexible, don't hesitate to cut when weakness comes in, and keep in mind that you can always re-enter. GLD has been crushing it. It's great to see. Of course, it's to the point where it's arguably overextended. We have seen in the most recent euphoric run from April of this year, it did run for, you could say, from about April 8th to around April 22nd. And we're getting close to that few week mark on this current rally where I guess it wouldn't be all that surprising to see a pullback. One thing that I will say is that we can see from gold's previous top on April 22nd, it had that initial gap up, and then it had that big red candle where when it opened on the day that it topped out at, it gapped up, got rejected hard, and, sold off in a pretty respectable way. And we're seeing something very similar now. Again, we see this, initial gap up day preceding what was the top. We can see the opening gap up on the day it made the high, and then it tried to run up, got rejected hard, and, had a pretty weak close. So I did want to point this out. Gold is one of those tickers where, you can trade this in a very short-term sense and do very well with it, but you could also do the same thing in a much longer-term sense. I know people have been doing very well day trading this one, but I also know a lot of people have been crushing it just buying and holding it. So whether you're trading it in the short term or the long term, understand what your time horizon is and adapt accordingly. The longer you plan to hold it for, the more wiggle room you can give it during its drawdowns. If you're trading very short-term expirations, then you better be quick to cut, because when it pulls back, like any strong moving ticker out there, they can be pretty sizable. So either way, keep that in mind. And this has been great to see with gold. Looking closer at some of the other hot things going on in the market right now. Basically, the earnings lineup isn't that crazy for this week overall, but Oracle went insane today. So basically, Oracle stock just absolutely crushed it in after hours. We can see it certainly posted a god candle here as it popped up by over 20% as they reported an earnings with a 359% increase in contracted revenue. So my lord, keep a close eye on Oracle. Again, this week wasn't on paper that crazy of an earnings week, but Oracle surprised everyone considering how much it popped up by. And it's crazy to say this, but when you go to an Oracle daily chart, you can't even see the ticker on the chart. That's how much it's gapping up by. I have to completely adjust the chart's axis just to see how much Oracle is up by now. So keep this one close on the radar. It's certainly in play. Of course, this is not something that, at this point you're going to be, the first one into. But when you have stocks that, are ripping like Oracle is, you do normally tend to see strong moves in both directions. If the stock gets to that point where it gets super overextended and starts to show some weakness, of course, you can always play the counter trend. And let's say Oracle just consolidates a little bit after market open, dips, and maybe opens up some good entry opportunities for some shorter term, bullish opportunities. Either way, keep Oracle on the radar. It's moving in a crazy way and for a good reason, especially considering this large of an earnings increase. So that's good there. But another thing I want to hit on really quickly to keep everyone informed is ticker symbol QMMM popped up by 1,700% today, and at its high point, it was up nearly 2,500%. These types of stocks are as risky as you can possibly imagine, but I do want to hit on it to point out an underlying theme we're seeing in the market right now. Basically, this is a Hong Kong-based company, super risky, and they said that they're going to establish a crypto treasury. And we can see, just like we saw yesterday with ticker symbol OCTO, it basically said the same thing, and it went beyond insane. So keep your eye out for stocks that announce any sort of crypto treasury news or anything like that, because this news is driving prices in a crazy way. Realistically, with QMM, it's probably too late at this point. I don't know too many people who want to be buying into the stock after it already increased by 2,500%, and it's a super risky company. But again, I want to point this out because other companies might follow in these companies' footsteps, just like QMM did with OCTO. And if we do see kind of like a little bit of a like a craze with this sort of stuff in the short term, it can offer good opportunities. So again, keep that in mind. And besides that, let's get right into the fun stuff, which are some setups and predictions. And a stock that is certainly on my radar is ticker symbol CNC, and it is to the upside. Today it popped up by just under 8%, and it's definitely on my bullish radar. Basically, we have had 2 recent big money trades with this one, and they were pretty sizable. The first one was a $1.8 million trade on the $27.50 strike calls for March 2026. The other one was a $58 million trade in the 25 strike calls for January 2027. These are both longer-term big money trades, which, you don't have to, trade CNC all the way out until those dates, but it does show that we are seeing a lot of smart money position themselves in a pretty bullish way. Not only are we seeing this with CNC, but another stock that is moving in sympathy with it, which is UNH. Remember, just back in August, we saw that it was announced that Warren Buffett has been buying into UNH, and then that definitely helped turn the stock around. Today, UNH had some good news where they basically, just kept their previous 2025 earnings outlook intact, and it also eased concerns that government ratings of its Medicare Advantage plans were at risk. So this definitely helped UNH and CNC. These stocks are definitely on the bullish radar. They've been beaten down to the point where we are seeing some inevitable buying come in. And not only do I like these stocks in a more of a medium to longer term sense, given the valuations they're at, as well as the recent big money trades, but I also like it in a shorter term sense because there is news driving this move. The stock is so beaten down, and we are seeing like real momentum come back into play. And when you have an 8% up day, that is certainly meaningful. And when the intraday price action looks like it looked today, it shows that there is a significant imbalance of buying happening here. It's not like we just saw the stock, pop up and then have like a super volatile day. Basically, the stock was kind of just like a straight line up all day long. And considering how much it increased by, it shows that the people who are buying this are getting in pretty urgently. And it's just, very one-sided. So basically, CNC is definitely on my bullish radar. The more it goes up, the more people that will be drawn in to buy it. And of course, the smoother the price action is, the better the opportunity is as well. CNC doesn't have to increase tomorrow, but I wouldn't be surprised if we did see it move higher over the coming days and weeks. Another ticker that's definitely on the radar is Microsoft, and it is in a bearish way. I covered this one yesterday. We didn't see a break below 495, but it is still on my radar for that. I'm looking for this one to show more weakness, and honestly, given today's price action, even if we see a break below 497, I do like the risk reward playing this one in a bearish way. It has been one of the weaker performing Mag 7 stocks basically ever since the beginning of August. It had that initial earnings gap up, and ever since that point, it has been selling off not only pretty hard, but also pretty consistently, even in a time where the market itself is, closing at record highs, which, is, certainly not a good sign for Microsoft. Also, by looking at Microsoft in a bearish way, it opens up some, bearish opportunities, which is never a bad thing to have on the radar, given all the crazy stuff we have going on in the market right now, let alone the historic bearish seasonality that we do tend to see around this time of the year. If Microsoft breaks below 497, I will like to look at this one in a bearish way. After that, 495 is a key support level, as well as $492.37 and $490. So keep it on the radar. But again, let's see a break below 497 before anything else. And then besides that, let's jump right into today's momentum plays. And with the first one, we have Robinhood to the upside. This one actually hit hit new record highs today, which was very nice to see. Basically, if we see a break above $119 a share, I will be looking at this one to the upside for potential momentum play. With the next one, we have SMCI, which is Super Microcomputer. The breakout level on this one is $43.80. And then with the last one, we have Apple, ticker symbol AAPL, but this one is to the downside, and the breakout level is at 233. They did have their event today, but investors clearly were disappointed. They announced their new iPhone, among other things, but again, investors were not too pleased with it. For these three stocks, keep them on the radar for potential continuations if and only if they break through the levels listed. But as always, keep in mind that how you trade is much more important than what you trade. Keep your stops tight, know why you're getting into any trade that you get into, and prioritize long-term, disciplined, smart trading habits above all else. Check out the Key Lessons channel in the StockedUp Discord to learn all about these for free. And then besides that, let's jump into today's $4.1 million big money trade. And we are looking at ticker symbol ALB. Today, this stock got crushed as it fell by nearly 11.5%, and the trader here bought the 60 strike put options that expire on December 19th of 2025. I'll start off by saying this is a very high risk, high reward trade due to this strike price. Basically, if ALB continues to tank lower, these put options can do phenomenal. But every day that it doesn't do that, you have time decay gradually working against you. So this is a high risk, high reward setup. There was a fair amount of capital put into it, and these options that are out of the money basically shows that the trader here is, positioning themselves to benefit from the stock having a continued drop. One of the main reasons ALB fell today is because one of the largest lithium producers in the world, in China specifically, announced that they are reopening a previously closed or paused lithium mine. Considering the lithium market has been very oversupplied and prices are low as it is, it definitely hurts ALB as, prices will continue to fall, and they are in the lithium and, EV market, we can say. So either way, keep this close on watch. High risk, high reward. But if we do see a flush in the short term, like we have seen a handful of times in the past when ALB has had big drops, then this can certainly be a play to keep on watch. If you guys are new to the channel, definitely consider obliterating that subscribe button to get our videos recommended to you more often. Every single day, we cover the most important news, information, chart setups, earnings, events, analysis, cool charts, and basically everything you need to know about the stock market. We try to keep these videos nice, short, sweet, simple, sometimes a little bit entertaining, and we cover big money trades every single day as well. If you subscribe, you'll get our videos recommended to you more often. And besides that, let's give a giant shout out to today's member of the day, iSeed, in the StockedUp Discord. They had a great post yesterday showing over $1,000 in gains with some hood call options. He said, "Thank you S&P and thank you StockedUp community for all the support and chit chats. Love it here, posting for the first time, but definitely not the last." So let's go. It's great to see this post, iSeed. Keep up the great work going forward. And if you guys are into short-term trading, definitely check out that first link in the description and the comments down below. This will give you full access to the StockedUp trading floor, which, among many things, you can access not only every single big money trade on the same day that it's posted, but before the market closes, and you can see in real time which big money trades are performing the best. So like, for example, we could see today we had a notification where the GLD big money call trade is now up 1,000%. This was the largest recorded that we ever had, so that's very cool. But you could also see other tickers that are performing good in real time as well. You can use commands to see the best performing trades at any time of day, access our army of day trading robots, chat with Tom and myself all day long, access our weekly live events, and so much more. It's the place to be if you're into short-term trading. And again, you could see a lot of cool stuff that could definitely help you find good trading opportunities in real time. So definitely check that out. You can save quite a bit with the link down below. But besides that, don't forget about that inflation data that will release 1 hour before market open tomorrow. It can bring in some good moves. Thank you all so much for watching, and let's crush it in the market tomorrow.